Hi, Scott Schubert here. When I first heard about the idea of Forex trading, it seemed like the most incredibly awesome business that I could ever dream of. I'm sure that everyone knows that Forex trading has the potential to be the greatest and most ideal business and a means for people to really achieve financial freedom and escape the rat race. But when I started to get involved and meet other people, I began to look around, and what I found was that people were actually very frustrated and disappointed with their experience in Forex trading. And a lot of people even have very bitter feelings of resentment about the money and time they spent trying to master the business of Forex trading without getting any results. Well, if you've ever tried to learn the business of Forex trading and you didn't get the results you're looking for, it's probably not your fault. Look at all the Forex trading systems that are out there, and notice how even highly intelligent and highly educated people find it very difficult to get good results, and many of them give up and fail. The problem, as I see it, is just in the way that people traditionally approach trading and the methods that people are taught and what they are focusing on. Another thing that I've noticed is that a lot of the training that's available in the Forex industry actually comes from Forex brokers. And a lot of the Forex trading mentors and gurus are also introducing brokers for some other broker. And let's just say that it could be that a lot of the training methods that are being taught are actually what brokers would prefer that you do, as opposed to what you would actually prefer to do in order to get the best results. Well, I'm offering this video as a service to the trading community so that anyone who has put forth sincere effort to learn how to trade and has only experienced frustration and disappointment, that person could now get some real clues on how to turn that picture around. Let me show you exactly what I'm talking about.
Okay, so what you want to do is just look at a chart, and you can look at any chart of any currency pair. And what I recommend that you do is you put yourself into a relaxed state of mind with some deep breathing and relaxation exercises. You'll find that you actually see things differently, and absolutely you will make different decisions if you're in a relaxed state of mind as opposed to if you're experiencing some nervousness, anxiety, or fear. But when you look at a chart, you're going to notice you're looking at the present, and the future is not yet known. This part's not filled in. And you want to be able to determine what is in the process of happening based on what you've seen happen before in the past. This is a chart of the US dollar versus the yen. Right now I'm viewing it from the 2-hour time frame, and here in the past you'll notice that the market has moved in a strong manner in one direction going up, and then there are periods of time where the market is correcting, retracing, or consolidating. During this time, on this time frame or a shorter time frame, any trader who entered a trade going long during this period of time, on this time frame or a shorter time frame, probably had a winning trade. And some of the traders may have been entering because of RSI crossing zero and stochastics making a bullish reversal in the oversold zone or something like that. Or maybe some traders entered because their proprietary indicator went green, a green light came on. Or some traders may have entered because they got an alert from some signal service. Some traders may have entered for all different kinds of reasons. But the point is, any trader who entered a trade during this period of time and went long probably had a winning trade. During this period of time right here, many traders may have entered a trade for the exact same reason. They may have had a trading strategy that produced an entry signal during this time period, and it may not have worked out. Now, if we look at the same chart from the 8-hour time frame, a trader might have been able to enter toward the bottom of this strong movement up and stayed in the entire trade as one trade on this time frame. On a shorter time frame, this might be 3 separate trades. This is viewing the same piece of the market from the 30-minute time frame but zoomed out, and there would be 3 separate trades here. And on an even shorter time frame, there may have been individual trades inside of each one of these sections, all for going long. During this time period, going long would probably not work. Going short would work on a shorter time frame. Now if you just look at any chart of any currency pair on any time frame, you're going to see this is what's happening. There are periods of time where it would be profitable to be trading if you are entering in the direction of the trend. Then there are periods of time where that would not work, and it would be better to not trade during that time or to trade on a shorter time frame. Therefore, any trading method that works would be to some extent determining when the market is doing this and then trading during that time, and then when the market is doing this and then not trading during that time on that time frame. Now if you look at the market again, you'll notice that there may be a way to determine when the market is doing this and then when the market is doing this. And when is it starting to do this? And when is it stopping this type of price action? And how can you tell the difference between a retracement during one of these movements and the actual end of that movement, when it's stopping and it's starting to do this other thing, which we call retracing, correcting, consolidating? When is the market actually reversing on the time frame that you're looking at? Now you'll see that if you can actually determine when the market is starting to do this, or when the market is actually starting to do this, where it's making this entire pattern up, and you could stay in these sections right here, staying long during these sections right here. If you could determine that on one time frame when this section is starting and ending, and on another time frame when this entire section is starting and ending. If you can determine how to do that, you have the key to endless profit from the Forex market. And the only way this wouldn't work is if you entered a trade and it wasn't starting to do that and you were mistaken. Or if you consistently exit a trade before it's stopping doing that. If you consistently exit your trades before it's stopping doing this impulsive trend-like movement. The trading world has all kinds of bizarre, complicated formulas and indicators and lines and so forth that traders are looking at in order to try to determine when to enter a trade that would produce profit and when to get out of a trade. And if you can determine this one thing, then you have the key to endless profit. This is an actual skill that is primarily a visual skill that is taught in our Yin Yang Forex trading course and daily in our live trading sessions in the Platinum Trading Group. And once you develop this skill, you possess that skill and you'll always have it for the rest of your life. And what we're doing now is refining even further the probability of entering profitable trades and reducing the number of false entries that would result in losing trades. But for now, just relax your eyes and look at a chart and see if you can determine when is the market doing this, and don't trade during that time. And can you tell at the time that it's happening, when it's just starting to happen, and can you also tell, like for instance back here, that that's not starting to happen for this time frame? There is a simple step-by-step process that anyone can learn and be able to recognize this phenomenon of when the market is trending versus correcting.